Imagine a tech titan quietly building its AI empire, while everyone's attention is focused on NVIDIA. Microsoft may just be the most underrated AI stock right now. What's driving its impressive takeover, and why has no one talked about it? With a market cap surpassing $3 trillion and moving rapidly in AI and cloud computing areas that could alter the tech landscape forever. With market capitalization exceeding that threshold, it appears MSFT may just become the stock to own. Or is its hype overblown? Stay tuned as we uncover hidden growth triggers you don't want to miss. Welcome to your go-to source for breaking down the latest stories in tech and finance. Today we're exploring Microsoft, ticker MSFT, not only a software giant, but a leader in AI research. If you're new here, make sure you subscribe by hitting that subscribe button and sound the notification bell so you don't miss any important developments in tech or investing. Disclaimer: the content provided on Bearish to Bullish is for educational and informational purposes only. Nothing in this video or on this channel constitutes personalized financial, investment, or tax advice. All investing involves risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any financial decisions, you should consult with a qualified financial advisor, accountant, or other professional to discuss your individual circumstances. Microsoft has long been at the forefront of technology innovation, from its Windows OS to Office Suite and cloud services such as Azure. But under CEO Satya Nadella's watchful leadership, the company has quickly evolved into an AI powerhouse through Azure platform usage, strategic partnership agreements with OpenAI, and AI-driven products such as Copilot. So what fuels Microsoft's surge, and should you include MSFT as part of your portfolio? Let's examine it further. Start with the numbers. Microsoft is unquestionably impressive when it comes to their financials. In its fiscal third quarter, ending March 31st, 2025, revenue increased 13% year-over-year, or 15% when adjusted for constant currency. Net income also saw significant growth, rising 18% year-over-year to $25.8 billion, with earnings per share exceeding Wall Street expectations by an impressive 8.6%. Microsoft's cloud business was the star of the show, reaching $42.4 billion and increasing by 20% year-over-year. Azure, its cloud platform, saw incredible 35% year-on-year growth that far outstripped analyst estimates by 31.5%. Productivity and business processes, comprised of Office 365, generated $19.6 billion and 13% increase, while Windows and Xbox contributed $23.7 billion. Microsoft also returned $9.7 billion to shareholders through dividends and share repurchases during Q2 2025, underscoring its financial strength. Microsoft Q2 2025 press release. These results showcase Microsoft's ability to drive growth across multiple segments, with cloud and AI driving this success story. Microsoft's AI ecosystem is a cornerstone of its growth. Thanks to Microsoft's partnership with OpenAI, advanced AI capabilities have become integrated into its products such as Word, Excel, PowerPoint, Outlook, and Copilot, which assists with document drafting, spreadsheet analysis, presentation creation, and productivity enhancement for millions. GitHub Copilot, another AI tool, has revolutionized software development, with over 1 million subscribers using it to more efficiently write code. Meanwhile, Microsoft is also investing heavily in AI infrastructure, with plans to spend $80 billion by 2025. Microsoft AI investment. This investment illustrates their dedication to leading the AI race. From cloud-based services such as Office AI skilling or workforce skilling initiatives training 2.5 million Americans on these skills, Microsoft AI skilling, could Copilot make Office the next $100 billion product? Microsoft Azure stands as a formidable competitor to AWS when it comes to cloud computing. AWS held 29% market share during Q1 2025. Azure trailed closely behind, with 23% up from 20% in previous years, followed by Google Cloud at 11% cloud market share Q1 2025. Azure also outgrew AWS in Q3 2025 by 35% year-over-year growth rate, demonstrating Microsoft's momentum in the cloud wars. Microsoft excels at enterprise relationships and government contracts, such as its $21.9 billion Joint Warfighting Cloud Capability contract with the U.S. Department of Defense. Azure stands out due to its AI services, such as machine learning and natural language processing. Businesses looking to build AI applications often turn to Azure due to this integration of AI services like machine learning and natural language processing. Recently, the company made an unprecedented $400 million investment into Switzerland for AI infrastructure. Microsoft Switzerland investment. Is Azure poised to overtake AWS anytime soon? Microsoft is expanding their product offering. Office 365 now boasts 355 million subscribers, and the integration of Copilot has caused a 30% price increase on Microsoft 365 personal and family subscriptions. ZDNet Office 365 AI. Windows 11 with AI enhancements now runs on over 400 million devices, further strengthening Microsoft's personal computing segment. Microsoft has seen great success with their acquisition of Activision Blizzard, strengthening Xbox and expanding cloud gaming as an area of growth. Their hardware business, such as Surface devices, continues to innovate with AI-driven features. Microsoft is retiring legacy Office products to focus on AI-powered Microsoft 365, keeping its offerings modern and competitive. Let's take a closer look at Microsoft stock. As of June 5, 2025, MSFT was trading at approximately $463 per share within its 52-week range of $375 to $473.34. Resilience has been evident as 73% green days occurred over the last month, with an overall volatility rate of 7.34%. CoinCodex MSFT forecast. Technical indicators point towards a bullish trend for Microsoft stock. Component placement with support at $450 and resistance at $488. Its Relative Strength Index, RSI, shows moderate buying momentum, while Fear and Greed Index indicates cautious market sentiment at 39. Analysts' consensus price target range is between $513 to $600, suggesting 11 to 30% upside. Microsoft's PE ratio stands out with its growth prospects, while its 0.7% dividend yield offers long-term investors protection from volatility. At Build 2025, AI-related announcements such as enhancements to GitHub Copilot and Windows 11, AI integration could boost investor trust and lead to further stock appreciation. Wall Street remains extremely bullish on Microsoft. Of the 58 analysts surveyed by Nasdaq MSFT Sentiment, 39 rate MSFT as buy, 14 as strong buy, and only 5 hold or no sell ratings were given. Morgan Stanley reduced its price target from 540 to 472. Microsoft target slashed to 472 as demand slips, but AI bet keeps bulls hopeful. Hedge funds like Vanguard and BlackRock raised their stakes in Microsoft in Q1 2025, reflecting strong faith in its AI and cloud leadership. Some analysts, however, have raised concerns regarding capital expenditures related to AI monetization. Overall sentiment, however, remains positive. Every investment comes with risks, and Microsoft is no exception. With an above-average PE ratio, any slowdown in growth or earnings disappointments could trigger corrections. Heavy reliance on enterprise clients could become a weakness should economic conditions deteriorate, potentially cutting into corporate IT budgets and forcing AWS and Google Cloud to innovate quickly to keep pace. Microsoft's $80 billion investment in AI infrastructure raises questions of capital expenditure efficiency if AI monetization takes longer than anticipated, or regulatory scrutiny around AI poses challenges to Microsoft AI strategy roadmap. Could such risks slow Microsoft's momentum? Microsoft presents an attractive case. Its enterprise moat, created over decades of relationships with businesses worldwide, ensures sustainable revenue streams from products like Office 365 and Azure. Microsoft Azure boasts 23% market share and 35% compound annual growth, distinguishing itself from competitors with its AI integration and $25.8 billion net income in Q3 2025 that supports investments in AI research, acquisitions, and shareholder returns. Global reach. The company's international operations provide it with an edge when servicing multinational corporations. Analysts project that the AI market could reach $47 billion by 2030. Microsoft stands to benefit greatly from this surge, thanks to its early lead in generative AI via OpenAI partnership and focus on responsible AI. As an early pioneer of this field, they also offer regulatory expertise with regards to their products. Microsoft stands to lead the AI revolution and is well-positioned for significant growth. With stellar financials, an expansive AI ecosystem, and strong cloud presence, MSFT stands to take full advantage of it all. Although MSFT faces risks like high valuation and competition, its enterprise moat, global reach, and strategic investments make it an attractive investment option. What do you think? Will MSFT become the leading AI stock by 2026? Please share your prediction by dropping your target price in the comments below so we can discuss further. Microsoft or NVIDIA? Who will lead the AI war? This video should only be seen as informational and would not be taken as financial advice. You should do your own research and consult an advisor before investing. If you like this deep dive into AI stocks, like, share, and subscribe for more content related to tech and stocks. Check back in next time. I hope to see you then. Are you bearish or bullish on Microsoft? Let us know down in the comments.